Welcome back to the channel, everyone. Tesla just hit an all-time high of around $580 per share, giving them a total market cap of around $550 billion. This makes them the largest automobile manufacturer by market cap, with Toyota coming in second at only $200 billion. The Tesla stock has grown a whopping 860% in the past year alone, and it also makes it the 8th largest company in the entire world right now, and it makes its owner, Elon Musk, the second richest person in the entire world. Now, does Tesla deserve to be the world's biggest automobile manufacturer, or is it one giant bubble about to pop? Now, before I get into the video, I do want to say that, don't get me wrong, I love Tesla. I think it's absolutely incredible the progress that Elon and his team are making with autonomous vehicles and with alternatively powered vehicles. I think the performance of Teslas compared to any of its competitors are absolutely sublime. The cars are a bit bland for me, but they are great cars. I also personally own shares in Tesla as well, although having done the research for this video, I'm not sure how much longer I'll be keeping hold of those shares. Unfortunately, there's only around 10% of you that are actually subscribed to the channel, which is really low. So subscribe, it's free and you can always unsubscribe later if you want. Now let's get into the video. To put it into perspective, Tesla's current market capitalization makes it bigger than Toyota, the entire Volkswagen group, the BMW group, General Motors, Ford, Honda and Ferrari all put together. And this just doesn't make any sense. A number of these companies have been profit making for decades, whereas Tesla's got a pretty mixed track record of profitability. The average price-earnings ratio, which is the value of a company divided by its annual profits, for a company in the automotive sector is usually somewhere around 15 to 20 times, as in the value of that company is 15 to 20 times its annual profits. Volkswagen, for example, has a price-earnings ratio of around about 19. BMW's is a little bit worse, at around 14.5. And Ferrari does really well with a price-earnings ratio of around 60. But all of these figures are child's play compared to Tesla's price-earnings ratio, which is over 1,140 times its annual profits. Again, to put that figure into perspective, usually a company with a price-earnings ratio of above 50 is considered overvalued, and that you should wait for that stock to fall before investing. Even if you compare that figure to some of the biggest tech companies right now, Tesla just blows their figures out of the water. Amazon, for example, has a price-earnings ratio of around 91. Netflix has a price-earnings ratio of around 78. And Apple only has a price-earnings ratio of around 35. It means that Tesla has a higher price-earnings ratio than some of the fastest growing companies right now, such as Zoom Communications with a price-earnings ratio of 545 and Peloton with a price-earnings ratio of around 879. And you could argue that these two companies are only growing so fast because of the hype of being able to use these products during the pandemic. I think that based on Tesla's current price-earnings ratio, it's undeniable that Tesla is currently in a bubble. It's not a case of if Tesla is in a bubble, but more a case of when that bubble is going to pop. Unless, of course, Elon can bring his profit up by around 20 times what it currently is to bring that price-earnings ratio back into a normal range. Let's look at it from a sales volume perspective. In Q3 of 2020, Tesla managed to produce 145,000 vehicles and delivered around 140,000. The Volkswagen Group, on the other hand, produced around 2.4 million vehicles and delivered around 2.6 million. The Volkswagen Group also generated around $2.7 billion of profits, whereas Tesla only generated around $369 million. So we can see that the Volkswagen Group manufactures and sells tons more vehicles than Tesla does, and also generates tons more profit. But yet Tesla's worth 6 times that of the Volkswagen Group based on market capitalization. It makes Tesla strangely similar to eToys.com back in the year 1999. eToys went public and the stock shot up to around $76 per share, meaning that it had a market capitalization of around $10 billion. That means the market capitalization was more than 2.5 times that of Toys R Us, even though eToys generated a loss of $29 million and Toys R Us generated profits of around $370 million. If you didn't already know, eToys.com went bankrupt a few years later, and it was one of the biggest bankruptcies of the dot-com bubble. And it just goes to show that sometimes companies blow up based on good promises, but deliver little results. Now, I'm not exactly relating Tesla to e-toys, because Tesla does actually have a good product and has recently become profitable. Although it has only recently become profitable this year. If you're enjoying the video so far, be sure to smash the like button down below, as this really helps out with the YouTube algorithm. From a technical perspective, if you look at the relative strength indicator, you can see that the RSI is starting to enter into this really overbought territory at around 75 to 77. If we look back in history, we can see that when the RSI gets to these numbers around the late 70s and 80s, that the stock has a pretty sharp pullback, like these ones here in March, July and August. We can also see that this stock is really starting to stretch away from not only the 200 moving average, but also the 50 and the 20 moving averages as well, further reinforcing the fact that this stock is really overbought and needs a bit of a return to normality. Even Elon Musk himself believes that the Tesla stock is currently overvalued, although this one has a really interesting backstory and a bit of a look into Tesla's future. Back in May, Elon tweeted that in his opinion, the stock was valued too highly. And this was back when Tesla was valued at only $156 per share, and the stock is currently trading for more than 3 times that amount. However, in May of last year, Elon stated in an interview that he does believe that one day Tesla will be worth over $500 billion. Although he believes this will only be after the introduction of fully autonomous vehicles, and Tesla aren't quite there yet. And therefore, even though Elon does believe that Tesla is currently overvalued, he does really want to try and prove the company's ability. Back in 2015, Elon also said that if he could continue growing his revenues and his profits, that one day Tesla would be worth over $700 billion, but with a 20 times price earnings ratio. So therefore, even though Elon might be right about the valuation, his expectations of the price earnings ratio are blowing way past his initial thoughts. And therefore it just further reinforces the fact that this stock is currently overvalued. However, don't get me wrong, I do think that Tesla have some very big plans. They plan to make 20 million cars per year in the next 10 years, which would actually mean that Tesla is making double the amount of cars that Volkswagen Group are currently making. Saying that though, I think it's also really important to remember that while Tesla do have patents, all of these patents are open source, meaning that Tesla allows any of its competitors to use those patents and doesn't open legal lawsuits against them. Therefore, technically, there isn't anything stopping any of Tesla's competitors catching up with them in terms of their technological ability. I suppose that really, Tesla are at the forefront of this technological development, and because all of the other competitors are so big and so corporate, it takes time for them to catch up in terms of their technical ability. But because Tesla's patents are all open source, there's nothing really that makes Tesla individual that any other competitor couldn't just copy and face no legal wrongdoings. Another reason why I think that Tesla could be setting up to be one of the biggest bubbles in history is because of its inclusion into the S&P 500. I'm sure all of you remember what happened to Bitcoin when it started to go mainstream back in December of 2017. Bigger investors like banks and pension funds all started investing into Bitcoin, and the price flew up to near $20,000 per Bitcoin. But after a little while, the banks had made their money and started selling off their positions, which caused the price to crash massively. Tesla could become a similar story, as it's soon to be induced into the S&P 500. The value of the stock flew up as a result of the announcement and could continue flying up into December when their stock is induced into the S&P 500. All the big companies and the big banks could get in and make their money and then get out, leaving the stock to crash. But you might say, well, hang on, Tom. Tesla isn't just an automobile manufacturer. They also produce and distribute solar power, they also distribute charging stations and are soon to be distributing electricity. But actually these parts of Tesla are quite small and are actually still loss-making. Tesla generated revenues of around $7.6 billion and profits of around $2.1 billion from the sale of its vehicles. Although Tesla as a whole generated revenues of $8.7 billion, but profits of only $2 billion. And therefore it generated an additional $1 billion worth of revenues from these other parts of the business, but actually made a loss of around $100 million. Now don't get me wrong, the proof is in the pudding. Tesla have been consistently increasing their vehicle output over the last few years and have recently become profitable. Tesla have generated profits over its last 5 quarters, ranging from around $16 million to around $330 million, and could have its first full profitable year in 2020. Elon also has a lot of plans for the future, such as building a fleet of over 1 million robo-taxis, each with their own ride-sharing app. So a Tesla owner can equip their car to be a taxi during their working hours or while they sleep. There's also plans to develop an entire network of underground tunnels to avoid traffic, a Hyperloop and a $25,000 entry-level Tesla. But these are plans that aren't going to be completed this year or next year or even the year after that. They're plans that are going to be completed in 5, 10, 15 years or maybe even longer. I'm sure that if Tesla keeps up this recent growth, it will be one day manufacturing more cars than the whole Volkswagen group and generating more profits. But right now, it's still quite a far way away. So it seems that Tesla might be slowly edging its way out of being a prime candidate for a dot-com style explosion into one day becoming an incredible successful company like Amazon or Apple. Let me know what you think down in the comments below. Do you think that Tesla is currently in a bubble? If not, why not? Do you think that Elon will be able to increase its profits and bring that price earnings ratio down to a realistic level, or do you think that the stock is going to crash? As always guys, be sure to check out some of my other videos. Alternatively, subscribe to the channel and ding the notification bell, because that way you'll be alerted when I upload a new video. Cheers!